The Russell 2000 Small Cap Index closed out this week down about 12% from its November record high. Now, a lot of people are panicking. They think things are going to get a lot worse. I personally am not in that camp. I use this dip as an opportunity to reinvest into 62 stocks that were already in my portfolio. If you're interested in seeing that list, it's published at my firm's website, and you can find that at investablewealth.com. Well, here's a chart of the Russell 2000. You can see that it's taken a substantial dip ever since its November peak. I'm not worried about that because I think the index has been in a consolidation period since April of this year. It made an attempt to break out in what I expected to be a Santa Claus rally. The resurgence of COVID has snapped that victory out of the jaws of defeat. But again, I'm not concerned because I think the overall United States economy is still fundamentally sound and that there's plenty of consumer demand to keep this stock market rallying for at least a little bit longer. If you look at the performance of the Russell 2000 over this past year, it's true that it's mostly been moving sideways and trading in a range, but that's only because there was such a large run-up after the November elections, and that continued into the first quarter of 2021. So yes, the market got a little bit ahead of itself, but overall it appears to me that there's some strong support and that every time there's been a pullback, the small caps have dropped down to that level and then gone on to recover. These drawdowns I've characterized into 5 different periods, and I'd like to briefly talk about each one of them right now. The first correction that we saw that happened after the March all-time record high for the Russell 2000, that occurred because there was a great deal of fear about the inflation that was occurring in the materials sector. That inflation was characterized by the huge run-up we saw in prices for commodities like copper and lumber. If you remember back at that time, I said I wasn't worried about the inflation, especially with the astronomical price and the rise of lumber. And my rationale for that was that, yes, although lumber prices were skyrocketing, timber prices were remaining relatively constant. What that told me was that there wasn't a shortage of wood. It was rather a bottleneck in the manufacturing and distribution supply that was causing the huge run-up in the price of lumber, and eventually that would work itself out. Well, that proved to be the case, and after the small cap index hit a double bottom, dropping down to its support level, it immediately went into the summer months, headed towards another record high. But before it could go on to hit another record high, that's when the second correction took place. We saw another double bottom down to that support level, and this time the culprit was the emergence of the Delta variant, which especially was spreading rapidly throughout the southern United States. Again, I wasn't concerned about that, and within about 6 to 8 weeks, the small caps started recovering, once again headed up to that previous record high. But it never got there, not because the economy was faring poorly, but just the opposite. The economy was moving towards full reopening status, and as a result of that, there's so much consumer demand that the global supply chains just couldn't handle it. So once again, the market took a dip, but this time it didn't go all the way down to its previous support level. And although there were some multiple dips in there was really only one significant bottom that occurred during that supply chain disruption. Again, I wasn't worried about this problem because I knew, just like we saw back in April and May when we had the initial hit of commodity-based type inflation, that the invisible hand of the market would work itself out. And that's exactly what happened as we got into November and the Russell 2000 broke out and went on to set an all-time record high. At that point, I was very enthusiastic. I thought it was highly likely that the market would continue to rally through the end of the year and maybe even that we'd see somewhat of a repeat of what we saw in the first quarter of this year. Well, I couldn't have been more wrong because by about the second week in November, COVID cases started to rise. Now, once again, this didn't bother me because in North America, we were obviously transitioning into the winter months. This is a time when you would expect people to have more colds and respiratory illnesses. And my assumption at that point, just like it has been for nearly the last 2 years, was that we'd see a brief downturn in the market and then things would once again turn around. So when we received the news that Austria was going back into shutdown mode and the market took a dip, I looked on that as an opportunity to buy into the market. But once again, I was wrong, because right after that, we got hit with the emergence of the Omicron variant, and piggybacking on that was the fact that the Federal Reserve came out, and instead of talking dovish and supportive of the economy as they have been over the last 20 months, they doubled down and reiterated that they were going to start their taper tightening on a more aggressive schedule. So when you combine that with the threat of the new variant and a more hawkish Federal Reserve, the small cap index once again dropped down and so far is finding support at that long-term support level. Now, will this level hold? I have no idea. Will it be a single bottom, or will we see a double or a multiple bottom before the market recovers? Once again, I can't predict the future. I have no idea. The market can certainly go lower from here, but the reason that I'm not concerned and I see this as an opportunity rather than a time to panic is because I believe that the economy, and specifically the United States economy and the smaller capitalized stocks that make up that market, I believe that fundamentally they're extremely sound. They've used the tragedy of the pandemic over the last 20 months to become stronger, more resilient, more efficient, and more productive. And when you couple that with the fact that consumers are not only willing to spend, but also have large cash reserves available to them to spend, that the consuming is going to continue. And I fully believe that the Russell 2000 Small Cap Index is going to go on to make record highs. So I see this as a buying opportunity, not a time to panic. I say this as a long-term investor. I have no idea what's going to happen tomorrow or next week or next month, but I've been investing in United States stocks since 1985. I've seen a lot of ups and downs in the market, and the lesson that I've come away with over all these many decades is that the economy is strong and resilient, and you should never bet against it long term. Well, hey, that's just my 2 cents. As always, thanks for watching. Until the next episode, this is John Pugliano wishing you the very best returns.